Hello and welcome to another update video about FET. Fetch actually is making a substantial move today after reacting to the 38.2 retracement level. Just above that, it came down to around about $1.10, and the larger degree wave 4, I mean, it might be complete already. You know, I always say that for a fourth wave, the 38.2 retracement is typically the ideal target, $1.08 in that area. Obviously not necessarily to the cent, okay, it's a volatile market, but please be aware that yesterday or a couple of days ago, I adjusted the wave count from a smaller degree wave 4 to a larger degree wave 4. Doesn't change the overall outlook, which is still bullish, but maybe a little bit less bullish on the larger time frame. We'll see, but that is not important in the short term. Still would like to get the fifth wave to the upside here on the chart. That fifth wave would be, because the third wave is an ABC structure. That fifth wave would also be an ABC structure. Important is that we're holding the 52 cent level now. That's really the lowest support I really want the wave 4 to get to. Doesn't mean that this level has to be tested, but there could be really good support down here because first of all, it's the golden ratio level, very important Fibonacci retracement, and it's the previous B wave low. Now, in yesterday's video, I made you aware that once we see a break above the nearest trend line, it might be worth watching this a little bit closer. And we had that trend line today broken. If I go to the 1 hour chart, you see this was pretty good trend line, several touch points. Actually, you can adjust it a little bit better, but yeah, it broke a little bit earlier today, 1 or 2 hours ago. And since that trend line break, well, there was no retest, but we've seen a move from $1.38 all the way up to around about $1.45. That alone is quite a notable move, but the move from the lows was already more significant. But you need some kind of a signal, right? I mean, we have broken above the last high at $1.37. At the same time, we broke above the trend line. So it's possible that the wave 4, or at least a more substantial low, has been formed. Now it could be, just to make this even more annoying, this ABC structure could just be a larger A wave. And we're now moving up in a B wave instead of the wave 4. We can put that potential on the chart so that you understand. It might be difficult to visualize. So this could be a wave 4, just obviously we talk about this as a wave 4 of this wave degree. But it's possible that this initial ABC structure is just the larger A wave. And now we're doing a B wave rally, and then we come down in wave C later. So this would be the more substantial correction. Absolutely possible, but not needed. Okay, just be aware of the relevant resistance areas where the price could still reverse from. So that means if anybody accumulated maybe over the last few weeks or so, or even months, and you still hold your position, as the market rallies into those resistance areas, it might be worth watching for rejections, or at least this is where the risk is going higher. Now, we've now just broken the first trend line, right? So the absolute nearest resistance is this area here, which relates to the C wave to the downside. It's between $1.55 and $1.73. If we can break above that resistance area, at least I can say with greater confidence that this C wave is likely finished, and we are at least moving up in the B wave. So that takes us to what is the resistance area for the B wave. The resistance area for the B wave is defined between the 50% and the 78.6 retracement. That's just B wave standard resistance, okay? So I'll just put it on here, B wave. And down here is just micro resistance. And this is B wave resistance, which is just standard resistance in case we're already in the B wave. So first of all, we need to check, okay, is the C wave down finished? If it is, okay, it might be a B wave. So pay attention to these levels at 197, 226, and 274. At 274, there should be some, or 272 in that area up there. There should be some good resistance because it's the previous swing high and the 78.6 retracement. If we can get above that level, 352 comes into focus. So different steps we need to take here, step by step, yeah. And then above 352, we're in the breakout. So it's a long way to go, a little work to do. We need a little bit more structure. So I can't really tell you much about this microstructure here, what's happening. There is just not enough structure. All we see is a green candle there. So if we now, for example, see a rally into resistance, a corrective pullback, we can look at higher for at least a B wave, and then we take it from there. But overall, structurally, no change since yesterday. But it's interesting that we have now a first trigger possibly for short-term higher prices with FET breaking above the initial resistance. Bear in mind that ASI will give us a new chart after the merge, but I think let me know in the comments. Last update was it's going to happen in July, that merge. I'm not entirely sure, but things are changing there all the time, so I'm not necessarily up to date. But that will give us a new and fresh chart as far as I'm aware. So that's my update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.